Good afternoon, trading world. This is my weekly pre-market outlook for the week of October 21st, 2024. It is entitled The Lull in the Middle of the Shift of Momentum. I ended last week talking about a blah type of feeling. I went from reading signs that said all go for a rocket takeoff, but then just in the end just feeling just blah. Now that I've had time to look at the overall picture, there are some signs of why I had that blah feeling. One of them is looking at the VIX futures and the timing cycle that I have on the VIX. And we are just inside of a trough on the daily and 4-hour timing cycles, meaning we're looking to get a pullback or rest on the VIX. And from looking at this timing cycle, this could continue until somewhere between the 3rd of November and the 6th of November. And now, if you think about it, the big event that will kind of kick us or kick some excitement back into the market and kick that VIX back into gear is going to be the election that happens on November 5th. I'm pretty sure we're getting that rest or that kind of store or kind of lull until then. Just to go over it again, right here I have marked right here my timing cycle. Excuse my mouse is not the most steadiest, but we have a line there. That dashed line represents the trough, entering that trough, and right here is where we begin to come out of that trough. And this is that variation principle. Somewhere between here we should get a low on the VIX, and that's exactly what's happening right now. Alright, now to prove the second point of this blah type of feeling, I go back to the the S&P E-mini futures, and what I have up is a 90-day 4-hour chart, and the lines that you see, the purple lines, are the outer edges of the expected move, the upper edge and the lower edge of the expected move. The black line is the starting point for the week, or closing point of the prior week, if you will. And what you notice from here is that we went from a relatively inefficient market. As you can see, these highlighted areas are where we closed outside of the expected move, and you see we have 1, 2, 3 back here in about 1, 2, 3, 4 in 4 weeks, and then we have a breach to the upside here. But ever since this last upside, we've quickly moved to a relatively efficient market, staying inside the market maker's expected move. And I'm not this is really close. This one time here, week before last, where we closed right on the edge of the expected move. But for the last 1, 2, 3, 4, 5 weeks, we've been relatively efficient. While the market is currently efficient, I expect another breach to the upside to kind of kick off the next inefficient span. And then from that breach to the upside, I expect a few consecutive breaches to the lower side of the expected move, kicking us or putting us back into that inefficient market condition. The market always does a great job of somehow putting a lot of us to sleep when we are all looking for that big decline. So be careful and stay woke. All right, now that I've explained why I have that blah feeling and I expect it to continue this week, I do want to go over the critical range for the week. And what I have on the chart marked from the 5909 all the way up to the 5945, and this is going to be what I feel the critical range of the week, where we could kind of play back and forth in this range a good bit for the week and dropping back down. And if you notice, I have this 58.79. From this 58.79 to 59.09, I'm going to consider that a chop zone for a majority of the week. Meaning, if you can avoid putting on positions in this area, do so. Because not a lot of good will come from it, because we could get a lot of chop back and forth in here, just kind of eating up theta and just time and chewing up stop losses if you decide to enter a position in this area. But that critical range from that 5909 up to that 5945 area, I expect to be really some real use and back and forth in this area this week. The rest of the support and resistance levels will be listed below in the description, but I just wanted to point out the critical range for this week and a potential reversal area. If we drop, that battleground area is going to be 58.66 down to 58.31, with the 58.50 being the line of demarcation. So those are the important levels of the week I wanted to touch on. Again, be safe. Don't let the market lull you to sleep. Stay woke. Be careful. And like always, remember, your most important job as a trader is to protect the capital you already have. You do this by knowing and understanding the risks you face in each position and in current market conditions. We manage that risk in accordance with our account size. I hope this helps. Wishing you a positive trading day. Let's get out and make it a great one.